Hey there, thanks for tuning in. This is Dr. Stock, Doctor of Education, and in this video we're taking a look at the overall markets. Yesterday I said I expected to see a little bit of softness, and well, we did get a little bit of that softness, and I think the debt ceiling thing is the thing to blame. Not necessarily that things are sour for it, but there was so much hype over the resolution that now that things are probably going pretty well for the debt ceiling, it's expected to pass the vote in the House tonight. That vote happens, and I'll show you just a brief article because it helps to explain one of the other exciting movers from yesterday. And I want to take a look at that. So I want to take a look at the Nasdaq. I want to talk big tech and see where they're going and what we can possibly expect from them over the next couple of days. And then our show stealers, of course, from yesterday, C3.ai, SOFI, and I also want to toss in Tesla as a bonus just to look and see where exactly they're at, because I think there is something critical on the Tesla charts that absolutely should get our attention. So there is an offer down in the description for Moomoo. If you click that link and sign up by using my link, and today is the last day for that offer. So today is Wednesday, May 31st. Tomorrow starts a brand new offer. If you want up to 20 free shares, you'll take advantage of that link that's down in the description. So let's move on from there. And I want to talk debt ceiling real quick. So right here, the hurdle expected to pass the House that they have at 7:15 p.m. is when they begin. 8:30 is when we expect to have the vote. That's tonight. So possibly you watch this video, if it's after that 8:30 hour, it possibly already happened and we won't see the markets react, although maybe the futures market might show us a little bit about what we expect from that. It could lead to some further softening in the overall markets. We'll have to see. Today could have just been a little bit of hesitance over, will we, won't we? And also, I guess China coming out with a little bit of soft economic data could have impacted that as well. And then we can't forget about the Fed and all the rate hikes. Now, I did say that this was tied to one of our big movers, one of our show stealers, SOFI. If we scroll down on this a little bit, there we go. It talks about work requirements for food stamps, IRS enforcement, and then the big thing for SOFI right here. It says about Mr. Biden's student loan repayment freeze. So the official end to that coming 66 days after the final pass of the debt ceiling, kicking that can down the road till 2025. All right, so I do want to take a look at the markets and see how they sort of went today and reacted to that news. So the very first chart that I have for you is QQQ, so tracking the Nasdaq 100. Let me pop that up there for you so you can see it. And let's zoom out just because it's nice to see the run that we've been on. So we have that big sell-off that we're all familiar with through 2022, and then we crossed over the 200-day, and you can see the new trend. The 200-day has finally started ticking to a positive slope, so that's a good bullish sign for us. We are starting to pull significantly away from the 50-day. That's this blue line that we have on here, so I'll zoom in so you can see that better. So we're going slightly uphill. You might be able to see these minor gray grid lines down here, and the fact that we're rising up off with the orange line, that's good. We are a little bit overbought on the RSI. You can see here it's over 70. And, well, it is possible to see a little bit further softening. We did get a doji candle today that for the Qs that we have right here, the Nasdaq itself closing down about 0.63%, almost even with the S&P being down 0.61%, and then the Dow not so much of a drop there at negative 0.41%, but that doji candle, it is possible that we see that uncertainty pass. Honestly, I think that we're going to see a little bit of softness over top of this. I think that the bears are going to win in the short term. Just a small correction, bring us down just a little bit. And I think a lot of that has to do with what we're seeing in big tech right now. So with that said, let's go to everyone's recent favorite, which is NVIDIA. We can see right now that what we have for NVIDIA, that we actually have a gap to fill. And the market absolutely loves to fill gaps in charts when we look at this. So we topped out before, and the highest closing day, I think, was $333 prior to what we got recently with their earnings. And C3.ai being the show stealer that we had, it is important to talk about their earnings because we do have some numbers coming out. And I would like to talk a little bit about especially revenue when we talk about the two companies and what we see from C3.ai and compare it to a champion company, a very solid company like we had with NVIDIA that doubled its market cap just from when I first reported on them back in January of this year up until their most recent earnings. Actually, this top candle that we have where it went up to almost $420 a share, we crossed briefly the $1 trillion market cap before falling off. That kind of reminds me of Tesla hitting a trillion before kind of selling off and get a little bit of that softness. So it's like, woo, we made it. And then, it's like having a results-driven goal. It just, once you hit it, you kind of sit back down on the couch and relax. And then all that work that you did to get there falls by the wayside. Now, I do like NVIDIA, and I did call them a champion company, and I think that they are. I think there are buying opportunities where we get lower cost bases coming from this. Now, if you're somebody who dollar cost averages, well, then you pay pretty much whatever price it is in the market, and that's if you buy at regular intervals, so every week, every month, whatever it might happen to be that you would add on to those shares. Well, then you're still a buyer in the 400s or near the 400s. I do think we'll see a little bit more softness coming back, and maybe that be a little bit of a correction for what we see for the Nasdaq and the Nasdaq 100, the Qs, as I showed you on this. So I do think that we'll fill this gap that exists between about 360 and like 335-ish. We actually have at the top of this candle back here, 346. So we have, let me see, about a $30 range is what that comes out to be from bottom to top, that I do think at some point in time that we experience a little bit of that softness that brings us back down to earth. Now, it's very worthwhile to point out, and here's where we have that tie into C3.ai with NVIDIA when it comes to their earnings. So NVIDIA came out. NVIDIA is an established company, and they stand in the way to make bank when it comes to AI. As a matter of fact, from their earnings call, we know that they went from about $7 billion during this past earnings, and they guided the next earnings to be $11 billion, right around $11 billion. That's about a 50% increase from quarter over quarter revenue. That sounds more like an incredible year over year number for them. However, it's quarterly, and that's just, it's wild. And that's why you see the sort of euphoria that you do for NVIDIA. Now let's go to C3.ai. And I will stop by some of the other tech stocks as well, the big tech. But their earnings are remarkable. When we talk about C3.ai, you can see the sort of path that they were on. And yesterday in my video, I said, if people are selling calls on this because they have lots of 100 shares at a time, that they're not selling naked calls, because, I mean, more power to you if you do. Just holy cow, you're playing with wildfire, and lots of people get burned in bad ways. Matter of fact, you need to have a trading account that's cleared to do naked calls in the first place. And that's very, very much for the trader's protection. So if you don't know what naked calls are, go ahead and look it up. And if you don't know what selling calls means, well, then this video is going to get kind of long. So I will just put that aside for right now. So today would have been a good day for that. As a matter of fact, tomorrow is probably going to be an even better one. If we go to the 5-day and look at the full hours, we actually dropped down at one point all the way down to about $31 per share. I had a put option out on this for about $30 a share, and I closed it out today because I was up significantly on my investment in that, and I was like, you know what, I'm not going to look this gift horse in the mouth and risk it in the after hours. So I took my gains of 25-30%, which I think are very modest. They would have been enormously better tomorrow, assuming that we're down around that value. Now you can see we've already recovered about $34. So I still think I would have been up money. I still think it would have been good, but it's hard to argue with the guarantee. It's sort of like the 5% in the bond market versus the risk in the equity market. So, well, I should say treasury bonds, treasury yields getting about 5%. And that would be considered risk-free because they're United States treasuries. Go debt ceiling kick down the road. I don't know what you want to say about it. I feel like they messed that up. In any case, the C3.ai earnings, they came in. Let me pop this up because I don't remember the exact number. Around 72 million, I think it was, million. They're a tiny company, and right now they're, well, before I made this video, they're around a $5 billion market cap to close. So about $4.5 billion at the close of the market, and they're going to shrink down below that a little bit. And that's a lot when you look at on a times revenue basis, because they don't make any money, so you can't say times earnings because they're still at a loss right now. So they came in at, looks like $72.4 million, and their guidance going forward from there. And this, I think, explains a lot of the softness, besides the fact that I think there was a buying into the hype of earnings, and then selling on the day of earnings, and then probably further selling tomorrow. Their high guidance is like 72 million. It's around here somewhere where they talk about the guidance for that. Let me see, guidance. Can't find it at the moment. I'm gonna have to pull that up. So this is their fiscal Q4. So the next earnings that they post will be their fiscal year Q1. And like I said, the high end of that is 72 million. That's zero growth. So I haven't listened to their earnings call yet. I'm interested to find out what sort of growth story we have when revenue isn't growing. Is it on the earnings end? Like, where's their business coming from? That's sort of what I want to know there. Like, if we're going to have that sort of growth story, and if their AI is really superior and going to hold out, where's their business coming from? What does that revenue structure look like? I don't invest in this company. I don't know the fundamentals of the company. Just from what I see in the earnings right now, I would like to see a solid beat, which we got a decent one when it comes to revenue, but not anything like we want. So that still a show stealer, just not necessarily on the upside. If we go intraday with the full hours, you can see a little bit more of this sort of sideways day that I had, dropping down from the after hours the previous day. And then into today, you can see it coming back to, I'm sorry, these are actually the pre-market hours. I actually go out to the 5-day to see the after hours that we had yesterday, and then separated by this line, but they're somewhat even. So let's go to some big tech. Actually, let's go to SoFi first, then we'll go to big tech. And SoFi, look at that run up over the 5 days. Let's go to the daily chart. Look at that, glorious. That's like a birthday candle. Any SoFi investors out there, people trading this that maybe had some call options anticipating this golden cross moment. That's one thing I want to point out. Not only are we near that golden cross moment, which I think adds to some of that momentum that you see currently taking place with SoFi, coming out of bearish territory into bullish territory as we come off this double bottom that we have here, and then breaking up above it, closing up above it with the debt ceiling news and the end of the student loan moratorium in sight. I think there's a lot of people closing out some short positions, and you can see in the options market that the put to call ratio, PCR, that we have right now is 21 puts for every 79 calls. So that's about 1 out of every 4 options that are out there right now. 1 put for every 4 calls. And I think the contrarian perspective is the thing that's going to get you through in this. I think this is the same sell the call play that we had with C3.ai. None of this is investment advice. None of this is financial advice or how to trade. That's all your decision, your research. These are just my perspectives on it. Great volume spike though. I think that this does pull back. I don't think that we revisit the lows. I think this golden cross is going to play out, and that after we see a little bit of correcting here, maybe down to the 650 like I thought we would get to today, and we just blew right on by the 650 that I thought that we would get today, and actually broke 7 briefly. That actually gives us a nice psychological resist that we have at the $7 mark, those round numbers and all that. So it is possible we pull back. Maybe you can see about a 50% retracement. It actually lands us pretty nicely on top of the 50-day that we have here. So 630 to 650. And if that golden cross plays out, if things continue to go well for SoFi, then we could see continued strength coming off that technical play that we have right here. All right, I want to wrap this up because it is getting a little bit long. So let's get into the big tech stuff. So I look at Apple. I think we get a little bit of retracement. I think we revisit maybe this previous peak and maybe a little bit more softness on top of it. Just a little bit of flow, a little bit of rest. And also, whenever we have hedge funds and institutions, they will be rotating out of the gains that they've made into other plays where they can find. So they will be repositioning themselves. So all this positioning into Apple down at these lows, I think turns into repositioning at these highs. Apple's a cash park though for like ETFs and stuff. It is fairly steady, nearly as good as cash. And look at that big, huge double bottom that we got on that. So I don't think that Apple's going to go anywhere anytime soon. Just a wonderful company with a lot of moat to it. I do think there's a little bit of price softness from here. I don't think that we're going to see all-time highs immediately unless the market rallies strongly from where we're at right now. Meta has a lot of gaps to it. Nice, smooth, steady. I think, again, just a little tiny bit of retracement, just a little tiny bit of softness. Maybe we come back to like that 250 level. I think that there's some slightly cheaper buying opportunities coming our way with that. Google had its golden cross moment. I talked about that in a video a few weeks ago, that happened and that started playing out. I think we're about right here, continued with that, and now I think it's time that we hit that overbought, that we start to correct course a little bit and come back towards our 50-day. And I think we're going to come back in a pretty healthy manner, but I still think that we continue in a bullish direction on Google. Microsoft, looking a lot like Apple in terms of more steadiness, less volatility that we have happening here. And they're near their all-time high when we look at this. So again, a little bit more softness, just some correction, give it some time, let the market catch up to it. And I think that that slow and steady will win the race. And look at that gap that we have between the 50-day and the 200-day. That is something that I think is going to close itself up a little bit. If you look at previous points in time for Microsoft, you can see any time that the 50-day starts to gap too much above the 200-day that we start to correct a little bit, soften, and then continue to rise. I think that it's the AI is going to be a really good thing for Microsoft. I think that we're just a little bit too steep right now, and that we just need to be patient on this and maybe invoke the inner Warren Buffett if you will, for that happening. Now, I said I would finish with Tesla. Tesla's still solidly on their downtrend. As a matter of fact, we have, let me slap a trend line on this because I think it's totally worthwhile. In any case, you can see the downtrend. We never really broke out of it for Tesla, but I think that that moment could be coming. We're starting to hit that confluence between AI and EVs and the charging deal with Ford. And we got faked out. Back here, we had that 50-day coming up on the 200-day, and then we had a big old drop with Tesla with earnings, and that worked out really nicely for me. Another put option play that I had going on right there. And it was nice. I had my earnings available over at the Patreon. That link's also down in the description. And then that made me a buyer of Tesla. Seeing that come in there and be able to get some really nice deals on that and ride that wave back up. We are back up above the 200-day. As long as we can hold that 200-day long enough, we're in good shape. And that 50-day, maybe we won't get faked out and maybe we hit that golden cross moment for Tesla in the coming weeks that are coming up here. So maybe we see that sometime in June, but if the market sells off in June, then we get faked out for a little bit longer. Tesla starting to advertise rather than slashing the price of their vehicles could be something that helps them to preserve their margins, and that's a really good thing. So like I said, I have the earnings projection over at the Patreon, and you're welcome to come over, check that out. Absolutely love to have you over there. We are a little bit overbought on the RSI. Maybe we settle a little bit off of that. Breaking up above this trend line is going to be huge for us. For Tesla, once again, I apologize. We do have a bit of a head and shoulders, an inverse head and shoulders happening here where, like I said, we got faked out the last time. Although this could be that moment finally that where we start to push up above, and then we can consider other values from there. As a matter of fact, if we could finally break solidly over the previous, like 212 to 216, if we could break up to 220, that would be incredible to watch that happen. So if we had a neckline on this thing, it's actually right about where the price is right now. This is setting up, in my opinion, in a really bullish way for Tesla, and this could be an exciting time. So I'm going to keep my eyes on Tesla, and I continue to be an investor in Tesla and still bullish, very bullish on Tesla. And I think that they have a very long, beautiful company career ahead of them. And I hope that Elon stays with them because I think that he helps carry some of that vision, even if his actions are somewhat mixed sometimes for people. So I'm going to wrap that up. Guys, don't forget about checking out that link down in the description for Moomoo. Today is the last day. We're getting up to those 20 free shares, 10 free shares. If you deposit $100 or more, for $1,000 more, you get up to that $20 free shares, each one valued up to $2,000 a piece. So take advantage. Hit the like button if you like this video. Press the subscription button to see more of my content. Ring that notification bell to see anytime my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.